Hey, good morning, everyone, and welcome to the PivotBoss Pre-Market Report for December 13th, 2016. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We talked about in the previous session that 57 to 60 is a very, very important zone. This area right here has already seen some selling pressure here yesterday after the big push up. Remember, the pullback into 78 to 85 was an area where bulls wanted to buy for a likely push higher. We talked about 2240, we talked about 57 to 60, and both of those major targets were hit on the way up. So a very, very solid push up. Now what we're seeing is the previous session closed the day with a rejection day, whereby we have a big tail on the top end of the day's range, and we saw a rejection of the previous week's close and high, closing below that zone. So that's typically bearish. That would imply that if this is an impulse move up, we could see a swing push back toward the midpoint of that range, which is 22.21. So right now, this would be the pullback phase into that area of resistance. Bears want to keep 57 to 60 offered, and they want to be able to close price back below 55s for a shot at seeing a move into 22.21. Any failure to get prices below 22.45 could further squeeze this thing. We know how bullish prices have been, so you have to be very, very careful here. Obviously, we're not expecting a whole lot of movement ahead of the Fed. We got the Fed two-day Fed meeting starting here, and then we have the Fed interest rate decision Wednesday afternoon. So we could see a digestion day here throughout the day where prices trade throughout the session, and then after the Fed meeting and interest rate decision, we could see a volatile breakout from this move on Wednesday, one way or another. So that could be an approach that we see today as well. So just be patient here today as we perhaps digest these highs and see further absorption by the bears in the 57 to 60 zone. Pushing beyond 2260 and holding would be an implication that further strength will be seen toward additional upside targets, and we have 2276 as the next upside zone. All right, let's take a look at the intraday time frame. Here on an intraday basis, what you see is that prices have pulled back. This is something I mentioned to our trading room yesterday, that this was a major rejection while everybody was mostly asleep. And I mentioned any push basically into 57 to 60 will be seen as a selling opportunity by bears. And it could happen multiple times over the next 2 or 3 days. And so here we are into that zone right now. So bears are trying to reject this area yet again. You can see here the highs. So bears are trying to return prices back down toward 44 to 47, 46 to 47. If bulls come down here and rotate, they're going to look to bring it back up. And that's what we could see as a digestion day. Now again, any push beyond 2260 starts to run the stops, and it could be very significant. So that's a zone that must be held by bears if this thing is going to rotate. Otherwise, the overall uptrending market remains intact, and this thing could continue to seek upward price discovery. All right, let's take a look here at the crude oil chart. Here's crude oil. In crude oil, one thing that's been yesterday was a big time gap up day, and prices gapped up toward 54s, pushed up through 54s, and informed support at 53.80. And I mentioned intraday, if price could not hold at that 53.80 support, we could be looking at a pushback toward 52, and that's essentially what happened here, leaving behind a major tail. The midpoint of that range right there around 53.30s, 53.36, and that's right where the session's high is basically, as price has come into that area and is currently being defended by the first wave of bears after the initial rejection. Bears want to keep the 53.50 area offered for a shot at seeing further weakness back toward 50. So right now this is an important area where bears want to keep defended. Short term. Any push beyond 53.50 starts to retest and trade 54s. So this is an important area here. This is quite a rejection tail after price gapped up. We are testing the midpoint of that range, and as I always say, the midpoint is where bears want to keep offered for a push downward. If price pushes through the midpoint, this tail no longer becomes rejection, and now you're starting to push higher through it, and that usually leads to new highs. So that is the key pivot to watch in crude oil. All right, let's take a look at the intraday time frame. On an intraday basis right here again, when you have a midpoint, that's this level right here, 53.35 rather on this chart. When price pushes into that level, you can see a resistance coming into play right there. Two little pushes into that area rejected, and now we're back. But again, this is a zone that could be defended multiple times before we see movement away from it. Any push above it starts to squeeze toward 54 and beyond. So important area right here to keep offered for bears. All right, let's take a look now at gold futures. All right, here's a look at gold futures in the daily time frame. One thing I want you to concentrate on here is this 1158.60 up to 1190.3. That's a key range with the midpoint at 74.40. That's an intraday impulse move, and it's created a key range. Yesterday in the trading room live, we saw that bulls were defending 1158.60 and keeping it sealed after the rejection below it. Typically speaking, what that leads to is absorption off that edge over the next day or two ahead of a potential squeeze back toward the midpoint of the range, which would be 74.40, followed by the potential to see the top of the range at 1190.3. So we could be looking at, again, yet another absorption signature by these bulls like we've seen over and over and over that could lead to a squeeze. However, we've seen the last 4 rotations that way have not led to that type of squeeze. Instead, we've seen the stops come out when the bulls fail to get paid. So right now, this is where the game is being played. It's 1158.60. That's where bulls are currently absorbing for a shot at running the stops back into 74 and 90. Any failure to do so, basically failure to hold at 1157, will start to run the stops to new lows. And again, that opens the door to the next downside key level, which we'll put at 1142.80. and a shot to see further weakness into 1126.90. So this could be quite bearish again if the bulls are not able to hold yet again, but this is where the game is currently being played. All right, let's take a look now at the NQ. Here's the NQ. One thing we talked about before was 48.80 here, and how every time we close above it, we sell off. Close above it, sell off more. Close above it, sell off even harder. Here's a close above it, and we sold off hard to begin with. And that's exactly what you like to see. We saw rejection above 4,900. And now price and the market is currently testing the midpoint of the previous session's range. This is important here because this move sets the range heading into the Fed. So we're likely going to stay within range. We could continue to drop, but we're likely to stay within range, somewhere between 4,900 and 48.50. And it's likely to be a fade the edges type of day with bears looking to defend the upper ends for a shot at being ahead of the next potential move across the range back toward 47.20. But there's no guarantee we do that. At the moment, we got to wait to see what happens heading into the Fed decision Wednesday afternoon. But overall, this is currently where bears are defending for a shot at seeing at least a pushback toward 48.06. All right, let's take a look at the intraday time frame. Here it is. On an intraday basis right now, you can see that so far price has just taken the previous session's close price bid and is traded higher and is now testing highs above the previous session's midpoint. Again, this is a zone where bears typically want to defend. So between 48.85 and call it 4,900, every time price pushes into that zone, expect bears to be defending throughout much of the day. Acceptance above 4,900 could be very big, and that could lead to a major squeeze ahead. But right now, given yesterday's rejection here above 4,900, the expectation is that zone continues to remain offered heading into the upcoming day's Fed rate decision. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck and trade well.